today's session, we're going to be talking about different investment strategies and why it's important not to have all your eggs in one basket. So let's get moving on. So this episode has been inspired by the recent news of Bitcoin dropping to under 24,000 per unit. And I'm going to sound a little bit vague about it because I don't really invest in Bitcoin, but I do invest in different strategies or different investment classes, shall we call them, which allow me to have a good, let's say, portfolio of investments. So I invest in property. I invest a lot in property. And the reason why I do that is because property allows me to create that residual income. Now, when you've seen stocks and shares, depending on whether you're playing the long game with stocks and shares or whether you're playing the short game, when we talk about that short, we could be in and out within the same day or the same couple of days and make a quick capital gain. Or whether you're playing the long-term game, whether you've bought something sustainable like your Apple, your Lloyds, and the larger corporations, and you're going to generate, hopefully you've bought them low enough so that they go up over a period of time. And I consider that similar to almost like a buy-to-let property. You purchase a property over a period of 7, 10, 15 years, that property is going to increase in value. So, you can kind of compare the stock market if you're playing the long game similar to the property market bit, because overall, the only difference I'd say is that the stock market is a lot more volatile. It's very rare that you will see one day a property value being worth 100,000 and drop down to 70,000 or 60,000 within the space of an hour. Whereas the stock market, it very much has the ability to do that. And it is very much influenced too by all the news and other external influences. An example being when Tesla owner Elon Musk reported or even tweeted that he wasn't sure about Bitcoin, and that had a massive impact on it a few years ago. Now, why is it important to have different investment classes? Because different investment classes will run through different cycles, and I'm talking about this from experience. So property will go through a cycle, stocks and shares will go through a cycle. Other classes that I invest in is watches. They go through a cycle. Classic cars go through a cycle. Fine wine goes through a cycle. And these are just some of the ones of the investment strategies that I kind of look at. I've not been adventurous and gone into the world of cryptocurrency and also NFTs. Lots of people are looking towards the metaverse to invest within the future. And I'm sure that there probably is a fair amount that you can make within that universe, but you've really got to understand it. Now, I was listening to a podcast recently, and when it comes to cryptocurrency, because of the volatility of it, you should really only invest in it if you really understand it. And this is not financial advice by any way, means or form. And if you do need financial advice, please go and speak to a person that is deemed to have the necessary qualifications to give you that advice. But with cryptocurrency, because it is so volatile, can go up and down. And what they've said is that only invest in cryptocurrency the amount that you can afford to lose. Now, when something comes with such a large warning like that, almost like on the packet of it, you kind of think that you're almost investing to losing. Now, I've known lots of people that have made lots of money from cryptocurrency, where they've got in at the initial stages and they made a lot of money, but equally they've decided to stay in and they've also lost a lot of money as well. Now, the one thing that we should say is with cryptocurrency, technically it is almost like, it's not like physical cash in the bank. It's only cash in the bank once you decide to sell. And the same with stocks and shares. It's great that you're saying that you've got a portfolio that's worth, let's say for argument's sake, a couple of £1 million, but until you've actually withdrawn it and got that money in the bank, that portfolio could crash tomorrow, or those stocks and shares could crash tomorrow, which ultimately means that it's not a very volatile, it's a very volatile market. So why I'm comparing this to houses and why I'm comparing this to properties, because like I said at the start, they're not going to go up and down. They're not going to fluctuate. Yes, over a period of time, we're going to have some price corrections. As we speak right now, property is still a hot market. And, people talking, is there going to be a price correction? over the next 12 to 24 months? I'd love to say yes, because it would be good to see a bit of stability in the market and perhaps some leveling out on prices. The reality is that no one knows. No one knows. There are signs that there are going to be some changes in the market, and with the cost of rise of inflation and all the other bits that are going on, and also the cost and the rise of interest rates, you could see that these are pretty much parts of the jigsaw which will then ultimately have a knock-on effect on things like the price of property. Now, the reason why I'm doing this is because I've known lots of people that have withdrawn out of property and put their money in cryptocurrency. And they've done this because property is not a get-rich-quick strategy. It very much is almost like a slow burner. There are strategies that allow you to generate some cash flow in a slightly quicker manner, and we could talk about this. So property has different classes. So I like to think that we've got a short-term class, we've got a medium-term class, and we've got a long-term class. The short-term class will be like your cash flow strategies, like your rent-to-rent, where the barrier to entry is quite low, but then the upside is that the cash flow can be quite high because the barrier to entry is so low. So hopefully that makes sense, because it's not costing you a lot to get involved, and because of the speed of the transaction, and because you can generate high cash flow, it is very much a cash flow strategy. And lots of people jumped on the bandwagon of service accommodation, also supported living, again, short-term strategies. Now, when I talk about short-term strategies, there are things, because when you compare it to like long-term strategies like developments, when you're talking to like standard vanilla buy-to-lets, these are things that, let's say buy-to-let, if it's going to make £200-300 a month, it's not going to get you to financial freedom very quickly. You're going to run out of cash before you actually get to financial freedom, because you're going to need a lot of money to acquire a lot of units. But ultimately, you're playing the longer term game. People invest in these kinds of properties because they're potentially looking to use property as their pension pot, and they may still be working elsewhere. Now, the medium-term strategy is very much things that you can get in and out of within a period of 12 to 36 months. Now, we're talking stuff like small developments. We're talking stuff like a buy, refurbish, refinance model. We're talking something where you can buy, do up and sell, so that you're buying it, you're acquiring it, you're doing it up, you're taking your money back out, or you're selling it, and then you're going again and again. And you can utilize the cash flow from your short-term strategy to fund your medium and your long-term strategies. Now, again, like I said, property has its own classes, so it's got short, medium and long-term. Now, we've talked about crypto, we've briefly touched upon the financial markets. Now, when we look at other investment classes that have done really well over the last, let's say 24, maybe even 36 months, which is watches. Now, we all know brands like Rolex, and we can talk about AP, we can talk about Patek Philippe. They're the three kind of elite brands. But in order nowadays to try and acquire such a watch, you have to, in essence, to make real good money out of it, acquire them for retail, which is pretty much non-existent, because you've had to have been on a retailer's book for a number of years. And what's happening is that the watch market, very similar to the property market, has gone through the roof. So a watch that you could have acquired, let's just call a Rolex here. So there's lots of Rolex models out there. You can buy a Rolex model, and there are certain models that you do need to become aware of. The most common one that lots of people will know of is the Rolex Daytona. If you can get a steel Rolex Daytona at retail, if you're to buy it from a retailer, when we're talking a retailer, a Rolex approved retailer, if you're to buy it brand new, they would cost approximately £8,000. Now, if you look at the grey market, you look at what sites like Watchfinder, Chrono24, etc., you can see that these watches are fetching in excess of £30,000, which is a phenomenal growth. And believe it or not, these watches are actually being sold at that level. And this is pretty much at the lower end. I don't mind saying that this is pretty much at the lower end. There's some watches where you're buying for 30, maybe £40,000, and they're now on the grey market achieving circa £200,000, £300,000, £400,000, £500,000. Now, where can you get that kind of level of growth within such a short space of time? Because let's face it, you're not going to get that from property. So that's why I said it's good to have different investment classes which go up in different cycles so that you can benefit from it. Now, at the moment, as we talked, crypto is on pretty much a bit of a down spiral. It's gone through quite a heavy increase and now it's on its way down, whereas watches is still on the increase. Property is now pretty much starting to simmer and almost like level out, and then the same with classic cars, still continuing to increase. And then wine is not a get rich quick investment. So if you do invest in wine, expect to play the long game, because again, the older the wine, the more valuable it becomes. So there's some of the things that I invest in, and I thought it was good to put this out there right now, especially because of what's going on in the financial market, especially what's going on with the cryptocurrency right now. And there'll be lots of people that may be ripping their hair out because they're feeling like they've lost a lot of money, or they've lost. But if you've got other assets that have done extremely well, it pretty much is like you've got to treat it like a balance sheet. You've got to try and treat it like a pair of scales. What's done well this year? What's done bad this year? And you compare it against last year. Last year, you might have had a phenomenal year with lots of different investment classes. This year, maybe one's dipped, the other one's excelled. And again, you have a look at all of them and decide, is it time to sell one? Is it time to put place in another? And you do what's right for you, because you might take some funds out of one and increase it into another that has done extremely well. And there's nothing wrong with that. Ultimately, you may decide that you're going to play a longer term game with one of them. So lots of people now, because Bitcoin has dropped dramatically, there'll be lots of people that will now start to look to get involved back into Bitcoin, which will then start to increase the confidence in the currency. And ultimately, you may drive again an influx to a positive rise again. So there we have it, guys. Hopefully I haven't just waffled for the last 14 minutes. Hopefully you've taken something away from it. If you haven't invested in other classes, maybe it's time that you decide just to even perhaps research it. If you've got something that you want to discuss with me, more than happy to have a chat about it. If there's something that I've invested in or I've looked into, because believe it or not, I've looked into quite a lot and I've dismissed quite a lot because I wasn't sure about it, or I've done research on it. And these are things such as wind farms. Now, no one really, or very few people that I know, would have looked at wind farms as an investment class. But believe it or not, it is, again, it's a bit volatile. But if anyone wants to have a chat about stuff like that, or if they've got a class that they want me to kind of appraise, I'm more than happy to do that. As well as that, you can connect with me on social media. You can find me on Facebook, LinkedIn, Instagram and Twitter, all under the handles of Arsh. This is sponsored by the Property Investor app, which is the UK's first property investment platform, which showcases all kinds of deals all over the UK. Whether you're looking for that below market value deal, that rent to rent deal, lease option deal, commercial to residential, land deal, we've got them all on the Property Investor app. So there are two ways to get involved. You can either go to propertyinvestораpp.co.uk, or you can go to the App Store if you've got a smartphone and type in Property Investor and download it from there. Please leave us a review on the App Store when you download the app. And as always, guys, I wish you all to be safe, well and happy. And I look forward to speaking to you all very soon. Thank you and bye-bye.